Hello, everybody, and welcome to today's edition of Forex Daily Dimes. And we've been doing these daily dimes for a couple weeks now and talking about the Forex market, trading within the 10-cent areas. That's what we call it, the dimes. Now, as I mentioned on the last show, I was going to bring a very special guest today, and today I do have that guest, David Warner, Forex trader, Forex fundamental genius. We're going to say. How you doing today, David?
Thanks, man. I'm doing well. How are you? It's good to see you again.
Real good to see you. Yeah, it's been too long since the last show we did. It's probably
Yes.
been 3-4 months or so.
Yeah, we do it more often.
I know we might have
I
to.
was just moved. I was in the middle of a move. I was busy for a while, but
Still in New York?
yeah. I'm in Williamsburg, New York now. Williamsburg, Brooklyn. I don't know if you're familiar with it, but it's essentially it's the center of the universe. I think it's just the coolest area. It's really really cool. I
All
love
you
it.
hipsters over there, huh?
Tons of hipsters. Yeah.
Nice. As we get into the show here today, before we get going in, I want to get into kind of how you started trading and investing. I know you've been doing it for quite some time. Kind of the only thing you've done is the financial markets, isn't it?
Yeah, I didn't really, I have a focus on currencies. I didn't really choose it. I always joke and say, kind of Forex chose me. I knew I wanted to get into trading and investing. My family was into it, and my first job out of college just happened to work in Forex, and so I honestly feel super lucky and kind of blessed in a way because I was able just to, not only trade it, but like see the other side of it, and I've seen just countless traders. I got to pick up these are things people do wrong. Here's some things that people are doing that are working, and it's been a journey, but I love it. I'll be doing this to the day I'm not here anymore.
There you go. Well, the nice thing is you just need an internet connection, and it sounds like you like to move from here and there. So
I've
you
been
spend a
all
lot
over
of time
the
in
place.
Texas too, don't you?
Dude, I have one of the things I've been everywhere, dude. Yeah, I've been in Texas. I was in California before I got out here to New York. So yeah, but I really like New York. So hopefully just everything kind of calms down and starts opening up again, because this is an amazing city when we're not on some crazy lockdown.
Sure. Yeah, I know you've been trading for a long time now, and I won't say that you have a unique style, but you have a really, it's a style that is kind of comes from the trading floors. I mean, in the trading floors, they're not looking at charts or anything. They're basing their trades and investments off price action, right? The actual price. And
Yeah.
that's why we call this show the Forex Daily Dimes, because we do a lot. I mean, you actually taught me how to trade 5 years ago now, and I actually took one of your classes. So it's pretty
Yeah.
cool, being able to trade the same style and be able to
Yeah.
talk about this all the time. But you're trading within we'll call it the 10-cent areas or the 1,000 pip areas. You break that down into sometimes even 25 pips. So
Yeah.
just talk about your style, what you do based on a longer term basis, and then a shorter term as well.
Yeah, I mean it's all prices. I like to keep it as simple as I possibly can. I can pull up a chart just to kind of maybe just to kind of explain it a little easier. But
Sure. Go
yeah,
ahead.
okay, so cool. So I'm gonna let me pull up what chart I want. Let's talk about like maybe pound USD or something. Does that
Okay.
work for you?
Yeah, and I'll bring it
All
up
right.
at the same time.
And screen two, share. Okay. Now hopefully you can see this, but like
Yep, I
the way
got you.
that, yeah, you can see it. Okay.
Yep.
So, the way that I trade, or what I focus on, is basically just very specific price points. And so I'm always breaking down the market. Basically, it could be whole number to whole number, which could be something like 1 penny to 1 penny. I could be going from, 1 nickel to 1 nickel. I could be going from, quarter to quarter. So, um, just the way that I'm looking at just the market right now. So for example, if I was going to look at the market dime to dime, so I'll throw the big, 130 right here. So just for visuals.
Sure.
And then, and I'll do a couple of them here. This is actually, when you look at the market this way, it's really kind of, I found it pretty eye-opening. Let me get this on a daily chart.
Yeah, and
So
before we get into real any strategy and everything, I just want
yeah,
everybody to understand there is risk in trading. Future trading results aren't, everybody is different based on risk management and everything. So you can lose money in trading and investing. But some of the things that Dave is going to talk about is how to protect yourself from loss, but also have bigger gains than your losses as well.
Yeah, absolutely. It's like basically, I'm always looking to kind of. It's always a game of momentum. It's always a game of. I am more of a chase price. Like if I get above one price, I'm looking to move it to another price. So like the pound is an interesting one. Just to kind of get into it, like with the pound is if I had to look at any currency that has an excuse to move for the rest of the year, it's going to be the pound. They're going through these big Brexit negotiations. I don't really have a crystal ball. I'm just making this assumption that we will get some type of deal. I think it will be a political win for both the UK and
Sure.
the UK and the Eurozone. So it's like, just to kind of talk about even just what you started with, like going from dime to dime, it's a pretty simple concept. And the idea is that if I can get above one dime, I'm going to try to make a run for the dime above it. The 500 in the middle essentially becomes kind of the wild card in a sense that this 500 can either it hits the 500 and it can throw price back to the dime it came from, or 500, you just kind of like, you're just looking for it to kind of continue on. So the halfway point is always just kind of the kind of scary price to try to get through. And as I'm drawing these lines, if you kind of pay attention, you'll notice how like a lot of like the tops and bottoms and just kind of like things are happening around these price points. So it has nothing to do with like, I don't really have to look at a chart. There's no like looking left, which is weird for a lot of technical traders because they're always trying to look to the left and like try to find, some type of zones, or trying to find some areas to kind of buy and sell from. So the way that I'm kind of playing this is like, I'm above 30 cents. So the idea is that I'm going to try to make a run higher. The first target is essentially kind of the 35. If I can get above the 35, then I'm going to try to make a run for the 40.
Sure.
But you can see it, everything okay? Okay.
Yeah, I can see it all good.
Yeah, but the idea is that it's just simply playing a numbers game. The idea is like, I know if I went from like 30 to 35, there's 500 points. There's 500 pips between these two levels. And so the idea is that I can look at, kind of the market 500 pips at a time. I could do it 1,000 pips at a time. But I don't know how many people in this audience right now are trading Forex, but it's like, I know I have 500 pips of profit. Then I just got to figure out what I want to risk to get the 500. I could say I'm going to risk 50 pips.
Mm-hmm.
Well, that's 50 pips of risk for 500 pips of take profit. That's a 10 to 1 risk to reward. And, chances are if I can kind of do something 10 times, I could have said, if I look down right here, I could have said, okay, got above, stopped out. Got above, stopped out. Got above, stopped out, got above, fourth time it makes it. You only really need, 1 out of 10. So you're going to be playing those number games on it. So like right now, the dollar had a pretty big gain here today. Just we had some weird stuff with the Fed, but the idea is that it comes down, it hits that 130 again. It's an opportunity to possibly try to buy it and push it up at least to the 35.
Yeah, that almost sounds a little bit kind of like the turtle traders. I mean, they took a lot of small losses.
That's what it's all about.
I forget when that was, but a lot of small losses, but they had such large winners that overtook all those losses.
Right. So, yeah, that's really the numbers game. It's like when the market's like Forex market when I think it's a very good trending market, and it's like you can just kind of find some of these trends, and like I could do the math and you just kind of go through, and it's just like, okay, when it starts to break below one, maybe you get stopped out, but it's just like you can see quite often how just using my lines, how it's like if I get above one, do we get to the next?
Yeah.
If I get below one, do I get to the next? And you're just going to have to learn to play the numbers game around it. The thing about trading is you can be wrong way more times than you're right. That's what a lot of people don't really understand. Anything else you do in your life to make money, typically that requires you to be right more than you're wrong.
Yeah.
Trading is just not that. It's not that sport. So it's
sure.
I find it it's fun, you know, and it's like you try to keep the system as simple as you can. So many people get so wrapped up while trying to introduce new rules and new indicators and all this, like looking left and adjusting time frames and all that kind of stuff. And you know, it's just trading in a trading system, like a good trading system, doesn't have to be that complex.
Yeah. So you're pretty much doing the same thing over and over and over again. You want one or two big ones here and there, and that's really gonna make it for you.
That's it. That's it. And just to kind of even just show you, I'm going to go back to this and just so it's like, okay, well, this looks like it's like long term, and it's like
Yeah, I
this
see you run a daily chart there.
this is a daily chart. So I have the time frame just to kind of have less candles so you see less noise. This is me looking at the market, basically a nickel at a time, 1,000 pips at a time. I can remove the drawings. I can get into a smaller time frame charts and say, okay, well, listen, I'm not going to try to move this market, you know, 1,000 or 500 pips at a time. Your scope can get smaller just depending on how aggressive you want to be. So it's like I can look at the market basically a penny at a time. Here is, you know, like, so it has nothing to do with like formations, anything. It's like, here's 32 cents. You know, right now I could say we are definitely, you know, I don't have a crystal ball, but I'm going to say, okay, well, we're going to try to touch 31 cents if it has not touched already. It already touched 31 cents.
Yep.
Now, the idea is like, if we start, and I can already see it there, if I can get aggressive and just say, okay, every time it hits, I can say if it hits 31, I'm already in a downtrend. I don't typically try to catch tops and bottoms. It's just like you're rolling the dice at whatever the trend is giving you. Here's 30 cents. And say, okay, if I want to play the short term, I know that I have 100 pips in between here and here. And I can say, okay, well, I'm going to execute trades at a penny instead of executing on dimes or execute on big quarters, whatever it is. And so now I have 100 pips there. I play a numbers game and say, okay, every time it hits one of these pennies, I'm going to pay attention to the trend it came in. 20, 25 pip stops, however you're feeling. If I do a 20 pip stops, I got 5 shots. I can be
Sure.
wrong 5 times, get it right, and you know, I've been get it right in the 6. I broke even, but it's just like you play a numbers game. This is just me looking at the market a penny at a time.
Yep. Now, are you
Yeah,
going?
20% at a time.
Sure.
Go
Are
ahead.
you base? Sorry about that. Are you basing that off of right as it passes? You know, that 31 cent area going down as it goes through it, or are you waiting for a candle close on a certain time frame?
So I don't know who our audience is here, but I teach classes on doing this, and I kind of teach them uh, basically both ways to look at it. Now I could do a candle close above or below something, and then you're okay. Now I have confirmation to take this out, or you can be aggressive and just be like, if I see that price and it hits, I'm just going to go. There's a give and take for that. It's like if you're waiting for confirmation, sometimes the time you get your confirmation, prices be pulled too far away from the price point that you wanted to get in. And sometimes if you don't wait for confirmation, you're just a little too aggressive and then you just kind of get run over. But typically I'm looking at something like this. So here I have here's like a Forex factory. I've adjusted these scanners in a way so I just see kind of momentum of percent change. I look at the market typically 48 hours at a time.
Yep.
And ideally, I just want to go with what the overall trend is. So if I look at the pound, I can say, okay, well, over the last 48, 24 hours, I see that it's down. So I'm just going to assume that something in motion kind of stays in motion. Ideally, I would want to see all of these reds. I can kind of short term, it's kind of popping up here a little bit, but I would just kind of, okay, well, it's right around one of those pennies. The overall trend over the last,
I think we lost you there, David. think we lost you there, David. Hopefully you're coming back here.
Yeah, I can see, like, I don't know if that's something on my end or your end. I don't know, but
That's okay. Looks like we got you back. You're just finishing up with the talking, the Forex Factory, talking about what's in motion is going to stay in motion, continuing that momentum.
yes, for the most part. I don't know if I can share again. I don't see. Okay, share. Yeah, just just what's in motion stays in motion is just the assumption. I look at like trading on the day to day is like, you know, and I typically look at like what's going on in the market, and whenever I start looking at it, could be in the morning or whatever, and I'm just going to say, okay, I'm just going to assume that it's going to continue in this direction until it's given an excuse to move in the opposite. I don't really trade off of, like I said before, I don't really look left. So I'm not looking for levels that say, okay, I'm going to try to take what's a downtrend and turn it into an uptrend and vice versa.
Got it.
Things like today, I'm big on the, as you said earlier, just kind of on the fundamentals. And, I'll even pull up something that's not really currency trading, but like can you see the S&P 500 right
I
now?
do. Yeah, we got you back full screen.
All right, so here's the S&P 500, and it looks like we just made new all-time highs, which I thought was really, really crazy. And then I'm just going to assume that like no one really likes to pay the highest price anybody's ever paid, and so I just felt that this was going to fall over a bit. And like something like the S&P 500, this is not just a Forex thing that I can do. I can do this with really any financial instrument. Here I am looking at the S&P 500, basically $25 at a time. So it's like 3,400. This would be 33.75. Excuse me, 33.75. We're now below the 30. That's what I missed. 33.77. So 33.75. And I did an online class earlier today, and I'm like, okay, it was around 75, and I'm like, okay, if we start dipping below this, I'm going to say, okay, 33.75 to at least 33.50, and just look at kind of moving this market in $25 increments. I always look at the S&P 500. What is the S&P 500 going to do? Because basically, if I see the S&P 500, like when you trade Forex, if you trade the S&P 500, you're already trading Forex. Australian dollar, for example, and hopefully you guys are seeing everything. So here's like the Australian USD. I'm going to remove these drawings, and I'm going to overlap the S&P 500. So here's the S&P 500, and if you kind of notice,
Pretty correlated.
right, you see the price action for whatever. So it's like I'll look at the S&P 500 to get ideas for what I want to do to Australia dollar, New Zealand dollar, Canadian dollar. They pretty have high correlations. I'll either do it against the US dollar or I do it against the Japanese yen. But if I see the S&P 500 is kind of having so for example, I'm going to go back to the main page here. So I'll go to more, we'll go to markets, leave here. And I can see, like, I pay attention to these up here, and I can see the S&P 500 is somewhat of a downtrend. So now, if I'd have no trade, nothing going on, I'm going to look to short the Australian dollar, typically against the yen or the dollar. So.
Yeah. Do you think, you kind of bringing up the S&P 500 now, do you think with such a weak dollar recently, is that driving a lot of this equities markets to go up?
Yeah, so the whole thing is like, I have no crystal ball, but we can say that the S&P 500, the way that it's been rising, the way as fast and as rapidly as it did from its March bottom, it's gone up. I don't know if the number is 52 or 56. It's one of those two, but it's like the fastest recovery from over a 20% drop.
Yeah.
You ask yourself here, the S&P 500 is the highest it's ever been, and you kind of think to yourself, like, is this the best our economy has ever been? And so there's like this disconnect from what the price of the S&P 500 is to like what the economy actually is. Now, I don't have a crystal ball, but like, the thing is like, you would think, okay, the stock market goes up with good news, but the stock market is not going up with good news. It's being fueled by like zero interest rates, cheap money from the Fed.
Yeah, we
Now,
call it Fed low.
the scary, interesting thing is when the Fed kind of like slows that stimulus down, and they'll slow the stimulus down because the economy is recovering. And so it's going to be interesting to see is that when the stock market, or like when the economy starts to recover, if the stock market goes down because the economy is recovering, because basically the Fed takes away the stimulus.
Hmm.
So it's going to be an interesting ride to see.
Yeah.
But like I lately haven't really liked the dollar. I haven't really liked the dollar as a safe haven. I always use the Japanese yen as a safe haven, but like we see the dollar kind of rising today, just today specifically, because the Fed came out and they basically made comments about the economy not really doing well. And I really don't know where it's going to go from here. I don't like buying the S&P 500. The dollar, if I went to like the dollar index, the dollar's at a 2-year low. We haven't seen these levels since like March of 2018 if we look at
Yep.
like the dollar index as a basket.
Yep.
And so it's like, a lot of the way that maybe many of these people listening here trade is like we talk about trying to buy things cheap and sell them expensive. So it's like right now the dollar is sitting at prices that we haven't seen since 2008. So
Yeah. That's why it's so nice with the forex market or the currency market is it's not necessarily correlated with the stock market, but some currencies are. But then you can diversify yourself properly through other currencies. You don't have to be stuck to just equities, which is a lot of people what they do because they don't understand the forex
oh
market.
yeah, yeah. What I have found, and from what I understand, it's like, in my and this is obviously everything I say is my opinion only, but the more you understand about currencies, the better I feel you're going to do when you're trading things like trading in the equity markets and trading in the futures market. Everything is priced in dollars. Everything is
Yeah.
priced in dollars. You have to understand what's going on with the dollar, like this whole, like what fuels stock market rallies, what stops the stock market from rallying, and typically that's changes in monetary policy,
Yep.
changes in basically the Fed putting more dollars into the system to begin with.
Sure.
Just to talk about, like, I'm going to share the screen again. I have the dollar index up this time. So, dollar index, can you see it?
Yep.
Okay, so like with the dollar index, maybe I would break this price down, calling what I would call like these big quarters. So things would end in like $2.50. This would be like 92.50. Above that would be kind of 90.95 even, right? And
Sure.
then it's like 97.50, and you can see really the same thing. If I can get above or below one, typically, the idea is that I'm going to play this numbers game. There's going to be a tell, and I'm going to try to just kind of, okay, I know where my kind of entry points are. I know where my exit points are, and then you just kind of understand. So like the way that I looked at, see, even just this dollar index. So here I'm going to put this even just to a daily candle, get rid of the noise.
Yep.
The fact that we kind of like broke underneath it and now we're kind of back above it, not have a crystal ball, but basically, it's like, are we going to try to just get this ride to at least this whole like 95? So I could see the dollar has been selling off like crazy, but it's just like if there's ever, kind of prices or areas where you're going to just attempt it, this was kind of one of them for me. So while
Sure.
it's just the dollar has sold off so far, so fast, because these are monthly candles. It's just like now it's just like, can we get a little bit of at least a small correction, some small bounce type thing?
Yep, and we're at that band there right now at the 92.50. So that could be, I mean, who knows? That could be that area. But I mean, it all comes down to just being properly, managing your risk the proper way, having your winners much larger than your losers. But also,
Absolutely.
it's nice to understand the fundamental aspect of it too in the currency market because, like you said, monetary policy kind of rules everything. It's kind of like almost like an equilibrium model. When
Yep.
things are good, they'll lower interest rates, but when they're bad, or they'll raise interest rates.
Right.
But to go bad, they'll lower them to pump some money into the economy. So it's just going
Gas
to go back and
pedal.
forth.
Interest rates are the gas pedal.
Mm-hmm.
And they just kind of go up and down, and you just got the more you understand just about that, the more you kind of plug in. Because I meet so many people that they just want to pull up charts and just look at everything, and every price is created as equal, and they just want to kind of close their eyes and close their ears to kind of what's going on out there. And I find that kind of trading blind. I mean, here's the thing. Like, what gives a currency value? What gives anything value? Like, first of all, what gives a currency value? Well, typically, the kind of how I explain it is like it's the strength of the economy and the stability of the politics behind it. So you just want to understand, like, what are those things that are moving? The market needs an excuse to move up or down. They say, well, the dollar was up today because unemployment numbers beat expectations, or vice versa. So it's not so much news. You're trying to pay attention to economic events. You know
Yeah.
what I mean? So it's a little bit of a different. It's just a little bit of a different game.
Sure.
But yeah.
Yeah, and I know we could go on for hours about this. Hopefully you come on the Forex Daily Dimes more often.
Oh yeah, for sure. No,
Hopefully
I'm
once a
kind of
week.
settled in. Yeah, we'll try to make it a regular thing. Be cool.
Yeah. So I appreciate your insights and your knowledge on the Forex market. It helps a lot of people just become more comfortable and confident. Just
Yeah,
they
absolutely.
want to look like to get in these type of markets. The sad thing is most people only know the stock market. There's great things out there. You just got to learn how to do them.
Absolutely.
Appreciate.
Yeah.
Go ahead.
No, I was just gonna say, for those watching the show that don't know me, they can follow me on Warner Dollar, Twitter at
On
Warner
Twitter.
Dollar. Yeah. And I'm an instructor with Online Trading Academy. I teach some online classes there. I have a class coming up where it's going to focus on basically this price-based trading system. So anybody that's interested can contact them.
Got it. Yeah, make sure to follow him on Twitter at Warner Dollar, and you'll be on the Forex Daily Dimes pretty frequently, I think. So make sure to subscribe to the Forex Daily Dimes, the YouTube channel here. It's actually Josh Lilquist is the channel, but Forex Daily Dimes is the show that we're doing. Running a show almost every single day, so in the evenings. So make sure to subscribe to that. Give us a thumbs up if you like it. Give David a thumbs up. Add any comments if you want, and things or topics you want us to cover in the future. So appreciate you coming on the show, David, and we will
Yeah.
see you soon.
All right. See you soon, buddy. Take
Yeah.
care.